So you're welcome tonight on our weekly business presentations and trading opportunity, both in all the market as it were. But of course, tonight we're going to look at the segment of trading and how you should take your trading very simple. Of course, you can trade without having understanding of the fundamentals, all right? Especially in the forex market. So we call it the macro, but you don't need to bother so much. But you can just have the understanding of what it's all about. And that's one of the things. So please, if you are new tonight and you have not been trading before, or you do not have basic understanding about trading before, this is one of the basic fundamental for every beginners called Forest Factory. You want to write it down in your note. Very important. Now, like I've said, the whole thing we do is that we're able to look for a way to raise money to build up equity. And having built up equity, we're able to have money for diversification into different investment. We know that a lot of people will tell, oh, I do not have enough money to invest. I would have loved to invest in opportunity, maybe different opportunity, commodity market and all of that. Now, many persons too have felt that trading is so difficult. It's not difficult, right? It's just that it's strange because it's not what you are used to. And definitely, if you're going to get to environment that you are not used to, will look strange. But it's actually not difficult. But we have bad expectation, and that's why we find it difficult to manage situation around trading. All right. So I'm not going to be teaching us psychology, but it's very important over time. I've given a lot of books on our group that you should read. No good trader is not a good reader. That's one of the things I've seen. Now, not trying to read different strategy, but to understand psychology, risk management, as it were. We have said trading involved three segments: the persons, the market, and then the strategy, which has to do with risk. Okay. So three segments of the market of trading: the person, the market, the money. Yeah. It's because the risk management has to do with money. So we have the person, we have the market, we have the money. Then you can have it this way: the person, the money, the market. Now, if you one of the difficult aspects of the whole area is not the market, it's not the money, but the person. So self is one of the biggest problem that actually create limitation for our business success or trading success, as it were. Now, I'm not going to go into detail just to give you peripheral, but to find a trade, we can pick a trade along the line. Now, so the person need to develop himself. So just get it right. You as a person, you must work on your emotion. You must work on your psychology. And of course, it's when you're able to do that. And now our goal in this trade house is that we should be able to build up to 500 people in the ecosystem. That's the whole vision. Up to 500 people who can be making average of $20 to average of $200 in a day, or call it, when you trade, okay? But the whole ideology say, okay, in a day I can afford to say I make $20 and or up to $200. Now can be a situation where you make $1,000 sometime, right? Depending on what your equity is all about or what's the size of your equity. So, but the point is this: we want to have community of our 500 people who can be making $20 in a day, all right, or average of $200 in a day. Now, but we know that the challenge is that equity can be a problem, and that's why we have been making information available about the prop firm. So tonight, we have two major segments of our forex: the platform for putting our equity personally trading, which is the capital extend. And so if you are in our community and you do not have capital extend account, you can go back to the group. Link is there, register, or if you're invited by a friend, go back to them, take their capital extend link and register, verify your account. And what is required of you is just minimum of $100 to be funded. Now, let me still correct this thing too, because sometimes when you tell people minimum of $100, it's okay, this is only the only thing I need. You need more than that. That's the truth. Because there are other things that you will have loved to be part of, because I've told us that I've created a lot of platforms, segment that if you have fund up to this, you have access to me on private mentoring. That's trading strategy. Not more than that pass, but the pass have different segments. But the surface of it can help you comfortably make money when you come into the market. Can build your confidence on it, and you make money when you come into the market. So self, then the money, then the market. So two things that are very, very important. Yourself and your money are the main thing that you need to work on. Learn how to manage and control them. But the market, just learn how to understand them and take advantage of it. That's what we want to look at. Now, we now said, so if I have my broker, which is very important, you open it, register, verify your account, get your account funded. That's the first thing. And that's why we'll talk about the capital extent first. Then second, you need to have tools. Now, if you do not have a laptop, no problem. Over time, you will need to get a laptop because when you want to do more analysis, you will need to get a laptop. But nevertheless, you can still use your phone. And I would advise if you're using your phone or a tablet, you should use it in a kind of desktop mode, maybe in landscape, that will be able to see your chart more better. And so now, if you want to learn how about, by the time you come in, we do a little intro about trading view, how to use the trading view. Even when you don't know, if you are not a technical analyst, you need it because when a signal is sent sometime, you want to confirm or when it's already away from within your reach of entry. Okay, now, so you want to write this now that in trading, because I know a lot of people are not getting it right, and you are scared sometimes when you're supposed to enter the market. Now, and like I was saying today in the office, I was telling some persons, the best time to enter the market is when the market is silent. And now when it's now moving, you are taking profit. But unfortunately, when market is silent, we're not scared. I'm not sure it will go my way. You have to erase that from your mind. Now, this is a chart. This is gold. All right. So remember, I'm not teaching concept. I'm talking about strategy. So this is gold. And I will always tell us the cheat sheet for this trading. Many of you, somebody gave me a testimony the other time. He said there was a time we're trying to trade in the night, and he said, of course, market was terrible at that time, and then we record a lot of losses, right, on gold. And he said, I did not stop. I kept coming to the market using the strategy you taught us. And that was how he was able to pass 50,000 challenge account level one, level two, even though he was having a very big drawdown. He passed level one and level two of 50,000 challenge account. And now he has been able to make first withdrawal on his challenge account of $50,000. And remember too what we say on the 50,000 or not 50,000, just like the trade mastery, the pro firm we're doing, it's not to be trading on pro firm and have your money on pro firm continually. Please understand this. The whole ideology about pro firm is to raise money, to raise equity. What you need more is your personal broker, and that's why I told us we're trading on capital extent, and I'll tell you reason why over time. And I've told some who have started with us because we are trying to build up a lot of things. Remember, it's for us to have minimum of 500 people that can be making average of $20 to $200 in a day. Okay, so if it's 2 days you trade in a week, or 3 days you trade in a week, so $20 times three will be $60 in a week, and then so if you trade that in a month, so talking average maybe $200, $300 minimum in a month, depending on what your equity is. Then people have much equity. All right, talking about maybe 1,000, 2,000, 3,000. I had somebody who made 9,500 dollars last month, right? Now, so the group you are, people are very seriously committed to what they are doing. 9,800 and something dollars last month. Yeah, that's good one for the person. Now, and I said what to make is not what matters, but what to do with what to make is very, very important. And now, so he's learning on how to spread his tentacles. So let's look quickly go at markets. I've said if you're actually going for, there are sessions in Forex, but trust me, sometimes market move by some activities and all of that. So we may not go into that so much, but you need to understand there are section, ACR section, London section, and New York sections, and all of that. And so the ACR section is characterized by range, none of that. But so now let's go. as if pars have different segments. First thing I told you, you need to check when you come in a day is that you need to look at, but I've told us that this market is choppy. And I'll still repeat this if you have not attended my class before, that market, what you need is number one. So our strategy, what it involved, please take note of that. What it involved, number one, is price action. All right, price action. So number two, so price action number two, we talked about liquidity concept, liquidity concept, liquidity concept, and number three, volume, and number four, discipline. All right, discipline. So, but what I say about the whole thing is that this one is very, very important. There are components of this one, there are many, but I told you that what you need as a beginner that you need to pay attention on this price action is number one, the candlestick. And I'm sure I've sent a candlestick Bible on our group. If you have not already, go and read it. And some other thing, demand and supply zone, I think I've sent few things. So candlestick, right? Candlestick. Then we have support and resistance. Or first, before support and resistance, market structure. Okay, market what structure? Market structure. Now, so don't worry, I don't want to complicate too many things for you. So, and then support and resistance. These three are very important for you. Now, other thing you will learn later. So there are many components of this liquidity concept, which is a kind of, combination with, smart money concept, ICT and all of that. But liquidity concept is actually not smart money concept. It just that's one of those content there and all of that. So what you'll be focusing on in this is called an imbalance. Imbalance. All right. Or you call it imbalance imbalance and displacement. Displacement. Forget the name, just see the function. So that's what I'm going to be doing. Imbalance and displacement. All right, of course, volume, which has to do with called momentum. Momentum. Now, then discipline, that's where we talk about plans and risk management. Plans and risk management. If you can master these things, they are going to be very okay for you. If you can master these things, understand how they works, it's going to be very good for you. So now let's go. I come into trade. It doesn't matter what time I come in, but if I can come in at the opening of the market is good. I need to have an idea of where the market is coming from and where is it going to and where is it now. So if you look at it, at least on a daily time frame, we can see that this market was an uptrend. But right now, it has been choppy. Okay? Now, this market has been choppy. Now, why is it choppy? This market is an uptrend, but has been choppy. So coming down from where it was coming from, on a daily time frame, you could see, so we'll talk about the market structure. Market structure is just the movement of the market from one place to another. And in the market structure is what define what trend are we. So we have an uptrend, a downtrend, and sideways move. So that's what I mean by trend. But what gives meaning to trend is the market structure. But you can have a structure without the first element, which is the candlestick. In fact, the whole thing you are doing in the market, if you don't understand how the market, the candlestick works, two things that are very, very crazy and important, candlestick and market structure. If you can know these two things, your work will be lesser. So, but now look at it. This market, these guys have created a lot of move, right? Now we have higher, 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 low, higher, 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 low. That means the market was an uptrend. The highest this market have recorded, and that's why I told you that since April, this market have been sideways. This was the highest this market have created so far. You may not need so much of that, but you need to have an idea where was it coming from and where is it. This was the highest it has created. This is the daily time frame. And this highest, the low that gave birth to it was this. So that means we have been bottled in this sequence all this while for gold. We have been bottled in this sequence all this while. Since April, we have been sideways. Don't mind whatever that's have been happening. So that means the lowest we have in this market on daily time frame was this. You see where I mark like this? That's the lowest. So this is swing low and this is swing high. Now, where it's coming from, that means it was coming from somewhere down and it kept creating structure. Now, so this, the highest place it moved towards this, and this the low, this is the place that gave birth to this. So it's very, very important for you. So here and here is what we call swing. This is a swing low and a swing high. So that means I have gotten a range ordinarily. This was the bottom that gave birth to this. I'm interested. Now, you can consider gold to be bearish for now on daily time frame, except this taking out. So understand that you can consider gold to be bearish or changing character, except this low is taken out. And even if this taking, so take note of this. A market is tend to be have changed direction, which is what we call, market structure shift. It has shifted when the market created, if it's coming from down, for instance, look at it so quickly, because market come like this. Now, this is like what we call textbook format of the market. Okay, so I'm going to do something like this now. Okay, so let's look at, so now if market was doing this, so what has happened is that if you can understand this very, very simple, so that when a signal is sent, when it's already not too good, you know, okay? Now, if this market is doing this, now here is a low of the market, but please understand something. The way they teach you market structure, that's not how market play out. It can got to a point and create complicated issue, and that's why we call it basic market structure and advanced market structure. So the advanced market structure is going to be more complicated and you will get confused. So here is a high and here is a low. So as long as this one, this is a low, this is a high. Now, so I want to use this diagram to define everything you need to know about the price action. All right. So this is a low and this is a high. And this is a low, this is a high. 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 Now, this is it. It's getting more interesting. Now, let me just take this like this. Now, it's getting more interesting. Now, here, that is a low, and here, that was a high. So, where this market stopped before coming down is what we call, this is swing, this is swing. Now, every swing low and a high would give birth to uptrend, all right? So it's a support and resistance point. Now, this low where the market start from, and this place where the market stopped and correct back. So if it's an uptrend, this movement up here now is called an impulsive move. Now, why this is called corrective? So if that's this corrective, that means where the market tend to have more longer candle, that's where the market tilt towards. So it gain more strength and momentum towards that. And that's why you are interested to know what volume is all about. So where the market is moving to, the candlestick is longer toward that direction. And then where it corrects back to is shorter to an extent and all of that. So that is to say, here, as far as an uptrend, here is a support, here is a resistance, here is a support, here is a resistance, here is a support, here is a resistance, here is a support. Now, because on a higher time frame, I wouldn't go to demand and supply zone, so that may be too much for you. But understand that what we're doing is that I need to understand what the market structure is all about. So if this is another low, and then we'd have another high here. So this low, this high. Now this high, what gave birth to this high was this low. Now this high came back, corrected itself, and have another low, but was not lower up to this point, is higher than this. That's what they call it, higher low. It's low, but higher than this, but lower than this. Now it move up to this point. So at this point, you see what we call market break of structure. Okay, so the structure has been broken, it continue moving up. Now you have another one here at this point. Now, this is the point. It won't show like this. If you want to see it well most time, you may have to use something called line chart, and that was going to help you. So with this is a resistance, this is support, this is a resistance, this is a support. So at every point in time, market creates support and resistance because it's going up, coming down, going up. Now, again, this is another high, this is another low. Now, this is another high, this is another low. Above all this is the highest so far within this time, okay? This is the highest so far within this time. So if this is the highest, you have to trace back, go to your left. What gave birth to this high is this Mr. Low. Look at this guy. This is the low that gave birth to this high. So if that's the case, that makes sense, okay? That makes sense. So now the market got up to this point and then corrected back and broke below this. This low that gave birth to this, the market came back and broke below it. In breaking below it, all right, in breaking below it, returning back, and it didn't get up to this point. That's what we call change of character. So at that point, it's now getting more interesting. But listen, for the fact that this guy broke below this is not a guarantee for you to say, okay, the market is now shifting or the market have changed direction. It has not. Here you have, since this low is broken now, and then this high remain as higher high, and this now become a lower high. It's high but lower than this. So that means we have a high and another high here. Okay? Then if that is the case, we have a high, another high here. Then we have a low. All right? Then this second high that was created, once this guy, look at it, this is change of character. Once this guy came down and broke this low, the low that broke this, that's a break of structure. That's why you see that some persons will wait and want to see when market will pull back to this region. Sometimes this market will pull back and get rejected at this region, all right? Or still come back and come to sweep some liquidity here. That's why I talk about imbalance. So now, as long as this low that gave birth to this high still stand, the market is still up. Then if this one break this and went up, but has not come back again to now break this, you can't conclude. So in a sense, you need to have a too high, a too low to confirm a total reversal. And a too low, a too high in the case of up move, down move, then before you confirm a total reversal. So I'm showing us, what I'm showing us this is very simple, so that when we tell you take a trade, so as far as I'm concerned here is the low that gave birth to this high, and now the market actually came down, okay? But for the fact that this market came down, did it broke this? No. Okay, that makes a lot of sense, right? So, but this is the problem. This guy now went up and create a lower high, lower than this high. So it has created a lower high, lower than this high. That means you are looking, it's getting more interesting, but we still have this. Now the market actually now broke this point, So it actually broke this low, all right, that gave birth to this lower high, and then it's getting more interesting. But all of this journey, we have not taken out this. Now it created an internal structure. So all of this thing is doing here now become an internal structure. Now this market again now, after breaking this, we wanted this guy to go below this, maybe stop here and continue rallying down. But instead of that, the market again broke above this. So it become range and then complicated for people. Now, some people will be treating this as a higher high, higher low, and all of that. This is higher high, higher low. Inside what structure? They become an internal structure. So here the market, and you see me, and I said, as long as this remain, then the market is not bearish yet. So all what we need now for us to have a very big move is for us to cross this. Now let's go. Let's save ourselves from this stress. So, but first thing I must establish is to know that the low that gave birth to the high is still standing. Okay, I've established that. So I will recognize a low and a high. The next thing that now matter to me is some point to point, some pivot point, which means this point here is a pivot point. This point here is a pivot point, all of this. Now you are just a day trader, so you don't need any too much English. But you have understood that the structure is still an uptrend. So for that, but market have been choppy. But no matter how choppy it is or sideways, you still have your momentum, intact. And that was why I told us, I said, what you can do in gold now is not a high trend, but buy, sell, buy, sell. So for me to buy and drop it, for me to looking for a buy and a sell, a buy and a sell, I need to understand support and resistance. So if I must recognize support and resistance, if the market is trending, you are going to have support and resistance very obvious. If the market is not trending, it's going to sideways, you are still going to have support and resistance, irrespective. But the way you would trade support and resistance of a sideways move is not the same way you trade support and resistance of an uptrend. So we're in a sideways move. So now, every day you come, you will see me, I'll tell you people that I want to look at the candle that is formed. All right. So the anatomy of the candle, the color of the candle is not what defines the candle. It is the opening and the close of the candle that define it. Please take note. The color of the candle is not what defines the candle, but the opening and the closing of the candle is what determine everything. Now, look at it. This is a daily candle. All of these are daily candle. Now, look at it. This candle opened here because the candle opened from up, went up and created a high, came down and created a low, and now close here. That means this candle was bearish. Now, the next candle that follows it, open actually. So as the candle opened, it first went down to create a low and move up to create a high and now close here. That means this candle was bullish. This candle, if you see what the candle did today, was confusing a lot of people, and I kept telling people to relax. This guy will buy up eventually, but not many person will understand it anyway. This candle actually confused a lot of people because the market was choppy. But at the end of the day, this candle now, by the time it's going to close, it may close bullish. This candle close bullish, that means tomorrow we are going to continue bullish. Forget about those language now. So you may not understand it so much. Because I just want you to understand basics of support and resistance. Now, so this candle, they close bullish today. Once it close bullish today, we're going to continue buying up tomorrow. Because if you look at this candle, look at where it came down to. Long week, meaning there was a big response back to the market. So you want to look at the candle that opened. Where was it going to? It opened and first went up and went bearish. But why the structure did not continue that way? Because it's sideways. So you have been able to see candle open and close on a daily basis. That's what you need to know. Now, for me, for you who is trading daily, what you need is 1 hour candle. Okay? What you need is 1 hour candle or structure. Now, so now we have come in your 1 hour candle or structure, you want to identify where was the highest market move the previous day. So the highest market move the previous day, please take note, if you have not been attending my class before, you may want to right click on your trading view like this and probably go to settings, and then you want to put in a session break. Okay, I don't know if you can see those lines very well, or let me just increase the, I don't want it to be too bold, obvious. So, but let me just put it that way to help us. All right. So if you look at it now, this point, this line to this line is a day activity. Now, this day, today has not finished. By the time today finishes, it's going to mark this line to show you the range of the day activity. Now, in most cases, this is where we now come to, like, I've told you about the market structure, which is up, down, and then trend, movement up, then support and resistance. Every impulsive move, correction, that place corrected from is a resistance if the market is going up. If the market is coming down, impulsive move down and correct back, That place he hit is a support. That place is stop going up and now crash down again is a resistance. And that's what you need to understand so that you can trade from point to point. Many of us don't trade point to point, and that's why you enter the market at the wrong time and it actually deal with a lot of people. Or you probably will not be able to know when and how to still hold a trade, perhaps. So now let me dismantle all of this so that we can do it very fresh. And then, although the trade is running, and many of you have missed out of it because it take only the people who were following very, very simple instruction to have maximized all of those things I'm just showing to us. Right? So now let's go here. So the whole thing is as plain as possible. Now, what am I looking for? Felix, you have come for the day or any time. It doesn't matter what time I come. So I really need to establish what was the market performance the previous day. So that's where I'm going to take my mark here and look at this. This is the highest yesterday. So I mark it here. You can see the market is almost taking the high of yesterday. So it's going gradually. Now, this is the highest of the market yesterday. Now, the next I need to mark is the lowest of the market yesterday. It's very, very important. Good. So this is where I draw. So sometimes you can label it. All right. Previous day low, previous day high. So by double clicking on that line and probably come to text, I put it in capital letter PDL, was the previous day low. And then I double click this on too and say PDH, that was the previous day high. Okay, so just to demarcate it. Now I've marked the low and the high. There is another point I need to mark because at the time you come in the date, like when the market has not done this, we didn't have these candles. So here you have the high, you have the low. Ordinarily on a good day, what we want to have is that a sweep of one side and now go to the second side. But the market can do something extraordinary. Now, so let's go here. Are there other important area that I need to check? Yes. Which other area I need to check? Let me open this thing properly, you'll see. Look at this long candle here. It has the low here. Look at it here. So I'm going to mark it out. It's very, very, very obvious. I'm going to mark it out. All right. Now, are there other areas I can actually mark out? There are other areas. An example of that area is up here, this one. Okay. Now, all this area I'm marking, they are very, very key areas. Okay. They are called pivot point. A point at which market get to and take a reversal or a market get to and pump. Okay. I will have marked this, but it's aligning with this. So I don't need to disturb myself too much. Now, ordinarily, I will have marked this, maybe not necessary, but sometimes if you want to mark it, you could mark it, but I'm just showing you. Now, if I step back again, another point I will need to mark, look at it. Let me take this line off. Look at this point. This is a pivot point. Look at this. This is a pivot point. Can you see now? Good. Okay. Now, this is a pivot point. Now, I've marked all of these points that are very important to me. This is 1 hour. Now, as a trader who is just looking for scalping and all of that, you can now step down to like 15 minutes. Now, listen, what we've just marked now is like top-down analysis. Now, and remember, we were trading price action, resistance, and support strategy. That's what we call pass. Now, on 15 minutes, if you come down, you could check, are there other areas you probably want to see that have not been marked, and market, when it gets there, is going to react? So you want to do all of those things, right? So perhaps, maybe there is none. It's clean enough. It's not just to draw tree, draw lines, anyhow, and all of that, right? So to an extent too, you can draw a diagonal support and resistance, as it were. Now, we have marked all of this. Now, this is the ideology. This market, you see me, those of you on our group, I kept telling you I'm stacking more position, stacking more position. That, but those of you who are new, or especially if your account is small, you may not be able to stack in more position. Now, Felix, can't I lose that position I was stacking in? Absolutely well. Now, when will I stop stacking in? Of course, when I see some key levels have not start getting respected. Because if you look at this market now, if you had crossed this point and didn't bounce back, it will have come to hunt this liquidity down here. Okay, that's what the aspect I'm going to talk about, liquidity concept. I'm not going to teach it as smart money concept. I'm just to tell you, talking about the price balancing in the market. Markets balance its prices when it move. What do you mean by balancing? Market start from somewhere, it move, it come, it move. So there's a bidding between a buyer and a seller. So they should reach an agreement. So the market should not jump. It's supposed to close. That means transaction was completed. Somebody requested and somebody supplied and somebody paid. And that's what we mean by balanced price. But in a situation where the market was not balanced, the price was not balanced, the price action tend to go back there to balance that book. Okay, that's what we mean by that. Now, having marked all of these things and I'm trading support and resistance, if you like, you can stay on 15 minutes. Now, look at one thing that really happened. One thing that really happened on this market was that markets actually open, all right? And this was the high. And if this market ought to sweep this liquidity, we still sell down. But in this case, there was so much very scanty volume. And as the market moved up to this point, it was selling. Now, having first move up at the opening and was selling down, there's what I use sometime in market open. It's called ORB. Okay, so don't bother yourself about that now. So you have marked this. Your expectation, very, very simple. Your expectation was that when this market moved, you were not there, right? So you expect that if this market come to this point, this is a liquidity. That is a pivot point, a place at which market, in short, when you talk about liquidity are buying limit order or selling limit order, stop loss, right? Stop buying, limit buy and limit sell, stop losses. They are what we call liquidity. Okay, so understand that. So forget the grammar. So talk about liquidity. Liquidity is simply pre-order that are made by retailers. So it's said to be that most of those institutional traders already know that at a support and a resistance level, especially a place that has a double top, a double bottom, or a sideways kind of trend line, that is that imaginary line when you say, okay, the market is respecting, let me use an example, that the market is respecting something like this. So it is said to be that because traders imagine that, okay, if the market actually break this point and they'll say, okay, if when it retest, I will buy, I put my stop loss here. So that's why market can come there and fake out. And people say, okay, market has actually broken that point. It's going to buy. And then the moment they buy, the market sell. That's what I mean by those liquidity. So those area market react, but you don't just because expect that, okay, market react there and then you're going to do what you want to do. So now I'm just doing these basics so that when we send a trade, where there's a need for you to wait, you wait. Now here comes the market actually induce us here, and you're going to see that. So if I go to 5 minutes, the market actually induce us here because we expect that the market will come here and sweep this liquidity. What do you mean by sweeping of liquidity? The market break it, and as if I'm going down, eventually run up above that region. That's a called sweep of liquidity. Now, but if you go down to 5 minutes, which it could be your probably normal time, most time when you are trading as a retailer. Now, look at what the market did here. It was a very big inducement. Look at it. So the market actually broke down, though we have one stop, one or two bearish close below this, but there was an engulfing candle, this bullish engulfing candle that ran through and stop above this. So this is another way for you to have found an entry. So you have entered there and put your stop loss below here. Then the market ran up, okay, and liquidate everybody and sell down. So chances are there that you are going to hit stop loss here. So you can now see that not all the time you win. Now having stop loss, hitting stop loss here, the market continue to go down. Now, another point you are expecting is this point. So you can see how the market induced today crazily, right? So another point you are expecting here is this point. Now, so this point, it's another point of liquidity, okay, here. Now, so if that's another point of liquidity, see, look at it. Multiple weeks, rally back above, then that means at the close of this candle, you will have earned an entry here. So look at how you are going to stop out again. You find an entry here. Many of you who will stop out today. Now, you have entered here. Your stop loss is below the wick of this candle. And then you are targeting 1:2 risk reward, which is here. So chances are there that you were stopped out again here. But the market actually pawn and then you are happy. Then the next in market return and took you out. Now, actually got you deceived, probably if it didn't take you out, depending on what's your stop loss, right? The market returned back again. Look at it. Market continued to induce all through this. Look at it. Continue to induce and eventually continue to step this. I told a lot of people, I say, I'm adding more position. Come down, continue to. Then your last hope, if not, it will break below this. We'll now have the market. A lot of people wait here, but I already entered more position here. And why? I've known this one was no longer working for me. This was working for me. This one was going to create problem for me as a resistance. And that's one of the things you need to understand when it comes to the market. So all the line you drew, you didn't draw them when the market has happened. You drew them before the market actually got to that point. So here we have sweep of liquidity again. Look at it here. Okay, actually mitigated this point. So, and that's like a resistance before turned to support. Okay, so SMC people call it breaker bulk or whatever. Now, at the end of the day, the market actually tapped into it and ran back. Oh, that's good. Now, this running back, look at this powerful engulfing candle and then the next close. So, this is the point. Ordinarily, a conservative trader is not going to enter the market until we take out this high. Yes. So, but for me, I've been waiting and I see that this was mitigated. And then I was looking for another entry here. So, but others who didn't wait here is going to look at the market actually break above this point. Let's go. Okay. So the market actually came and broke this, and that means it has actually changed character. And then above this, the reverter here was to find an entry. So that means it's going to refine, sorry, I don't need to go too much about that. So that means it's going to refine a kind of order block here. So if that's the case, that this person refined here, that means everything around this, like another flow, was what made him to say, okay, I'm going to find an entry. Okay. So he has situated that this is a break of structure, okay? It has shifted and then the return back. Perhaps if you combine this gain, you are going to have what we call an imbalance. Look at it. You are going to have what we call an imbalance. And what's the imbalance here? This point, this week to this point is an imbalance. So the market came and tapped into it, and that means you're getting an entry. Now, for support and resistance trader, we going to wait. Since this market was close to this point, it's going to wait for this to be broken. Perhaps for conservative support and resistance trader was going to enter at 3314 region or after this engulfing candle. So that means his entry was going to be this. Now listen, and I told some persons when I was in the office, I said, the moment we cross 3319, 3320, that the market is going to run up. So for this person, is taking a trade here. And of course, you are going to see that his stop loss will be big because this is the immediate swing low. So his stop loss is going to be big. This is good. Okay, not even too big. I'm sorry. Okay, because this is 5 minutes. So his stop loss, let's just say 100 pips. Okay. And so since it's 100 pips, it's going to be targeting 1:2, all right? So 1:2, 100 pips to get to 200 pips. So this is 200. 207 or so. Look at it. So this is your take profit level. All right. So now the market is doing what it's doing. And of course, I'm not going to be teaching about what to do. You are taking profit, you now take stop loss and all of that. So what are we to do now? Good. The market is moving now. This is a pullback, another impulsive move. We are going to get an entry maybe before we close because this is another pullback. Okay. This is another pullback. So we want to look at it. So let me just mark up this point. So we're going to wait for this market. Now that it's pulling back, okay, we have about two candles, already a swing on its own. So probably after the close of this candle, we want to see maybe another candle will come aggressively pull back. So if I see a new candle open and first pull back, probably even very aggressive, touching to this point or not touching to it, whichever, and now buy up or even this candle itself before it closes and buy up, creating a kind of long wick and wait for the next candle, let it open and be bullish. Okay? The market, the next candle open and become bullish. So if this candle open now, closes and close bearish, I'm waiting for the next candle to open. So this is where I tell most of us when the signal is given and you know you came late, don't jump at the signal. What do I need to do? I wait for a pullback. Look at this. This was a pullback. I'm sure a lot of people were afraid. Now look at the challenge you will have had. The market was going and it was here. And now you say, oh, the market, I was not there. 3333. And you now bought here. Chances are there that you are going to run out when the market was pulling back here because you say, the market is crashing back. Meanwhile, it was a major pullback. After the pullback, look what happened. Look at what happened here. This is the type of thing that I look for. But eventually, after this close of this, we need a kind of bullish candle, at least to be engulfed. But this was doji. That is an indecision. An indecision. I was not going to do anything. Now, the next candle open and close. This candle actually closed bearish, which means this market is supposed to crash. But after the close of this candle, you waited and this candle was opened and engulfed this candle. That means you have found an entry. So you are entering here, and of course, your stop loss will be below this point. Now, just like we're waiting for this guy. Now, most time we don't stay patient, and that's why we miss a lot of trade or we cannot manage some trade. So at the close of this candle is my entry, for instance, and my risk reward ratio. So below here is my stop loss. Look at it. So that means ordinarily, look at it here. One ratio, two risk reward. So that means I'm ready to lose 27.2 pips to make 54.3 pips thereabout. That's okay. You have made money. Now it now depends on this is where this candle is already creating. Once this candle closes, remember I told you, I say I want a candle because this is a pullback for the market to continue, right? So I say, I want a candle, the next one, look at it, let me open it very well. So you can now see what I'm telling us about candlestick, right? So I want this candle, good. So it can create like a pin bar, hammer or whatever. If you created that, like a hammer or whatever kind of a thing they call it, now the next candle, right? Can you see what I'm saying now? Yeah, so for sniper entry trader, they will jump in and no, I won't jump in, right? But if it's a trade that you were in before, okay, you are already in profit. After this, immediately this closes and close as a pin bar or hammer, whatever name they call it, then that's a sign that the market is returning back. This is a complete swing low because this broke a structure. 1, 2, 3. This break a structure here, or structure was broken. After a structure got broken, impulsive move, you want a corrective move. After the corrective move, another one for us to move. So some persons while trading this, if this candle closes now and have a kind of bullish candle following it, then that means you are entering the candle. Now, if you enter that candle, some persons can enter that candle, let's say here, perhaps here, and then the stop loss, because if this had been formed properly, so the stop loss, some maybe want to be conservative below here, but of course, it's actually below the wick of this that was formed. Now, if you look at it, that means even at the close of this up here can be your take profit. So, but we are waiting conservatively. Let this candle closes, and we have like less than 3 minutes. So let's watch what happens. So get ready, everybody. We're going to buy gold because you're still expecting that to this level is a very good point that the market will get to. Now, so if you are not patient, but this is the warning I give to most of us when we're trading. If you are building an account, don't trade too many instruments. Or if you want to trade, I have told you, newbie, 3 instruments maximum. So go and check. If you have not listened to the voice note on the group, kindly go back and listen to the voice note. So if at the end of the day, you are picking one particular instrument at a trading session, maybe in London session, right? Or New York session, face that instrument and maximize it. And I've told you guys, those of us who are trading, those of us who are doing challenge account, don't trade more than good for now. Okay? It's like those of us, either you have $10,000 account or 25 or 50,000, just face only gold. And I've told you that no matter how choppy gold is doing, you still have a good volume. Okay? Can you see now? So this candle has not finished, and some person will have jumped in because they just say, hey, this candle have formed a hammer and all of that. At the end of the day, the candle has not finished its formation, and you just assume that, okay, let me just jump in and all of that. Okay, so but we are going to get a trade after this so that we're able to have at least, even if it's $10, all right, so that we can trade. Now that brings me to another point. So we're waiting because ordinarily you are looking at all these markets. So look at this point where the market got to. This is another liquidity area, okay? This is another liquidity area. Another thing that we need to know is that I think market normally pause, is it from 10 to 11? Okay. 10 to 11 or 9 to 10, I can't remember. So this is another liquidity zone, and this is another liquidity zone. So you expect that, okay, when the market get up here, most time too, when you are actually a very, very conservative trader or a highly disciplined trader, when the market is close to a support or resistance zone, you wouldn't want to take a trade and all of that. But nevertheless, so we'll just see what play out so that we can buy into it. Now, I have to take my time to explain this. I may not have time to start saying this again, but I just want everybody to have this basic, right? I think I was in the office when some people were in a trade and they were in drawdown, okay? They were in drawdown because they enter market wrongly, I think at about 3316 or something. Ah, no. Some of you, the trade I saw, you enter market at 33. Come on, maybe somewhere here, 332 something. I think so. And market traveled down, and then so of course you may not be capable enough to say, let me short the market. You're only just waiting for the market to actually correct itself. Okay, let's look at what is it doing now. That was not a beautiful close of candle. So this candle, okay. So it's proving to be bullish. So the moment we have a bullish close of this candle, this is 5 minute time frame, please, ladies and gentlemen. You may want to ask which time frame is this. So if this candle close bullish, then you are adding to your position. But because remember, you are close to liquidity area, you're looking close to support resistance point, and that's why you take your time. A lot of people will have jumped into the market even after this candle, and then when the market is struggling at that point, say, oh, I will have waited and all of that. It's better you miss a trade than you are trying to manage a trade that is giving you a very big loss. Psychologically speaking, you will not be stable. Okay? But if I was on this trade, okay, if you are any of you in this trade, and then you're already making a lot of money, now after this, you want to just find an entry because the market, the pullback is already limiting its trend of candle and now having shorter candles. Now, if you're not careful, you can jump in and the market continue to retrace down, and then you can't stop it as long as this low is still standing. It can even come down to this point before bouncing up and all of that. That's why I always tell people wait for a candle close before you jump into the market. All right. So this candle, we need it to close bullish, then we can now find an entry. And I've told us several times that it's very, very easy. That it's very easy for you if you don't know how the trend is working. That's why I recommended that when you are trading, even with your 5 minute time frame, you can always sorry. So you can always use your 50 moving average so that once you are above 50 moving average, that confirm your bullish momentum or an uptrend. And so you can see all of this while we're struggling to reclaim back that point, but it was not reclaimed. Now, if you look at it, it's just like in consonant, that place I say we will find an entry. That's exactly the point of breaking out, right? This engulfing broke out, and then all of these stayed above it, and that will have been a proper entry. That will be a second confirmation for you above 50 moving average and all this why. So here too, then this pullback finishes, and that was going, that's above 50 moving average. So this one that is still dialing now again too, when it finishes. So guys, can you see when I said you don't trade when a candle has not closed? Can you see now? So look at this candle. Assuming you just say, oh, let me just go in now. After all, this candle is creating a pin bar or something. Look at what this one I've created. So as long as this preceding candle did not close bullish, then you have to wait. Okay. If not, you are going to run into a wrong market and eventually blame yourself. Okay. But I think even if you cannot find a trade, which I'm going to look for any instrument if gold will not give us money. You know, gold has tried. Those of you who traded gold today, after it has stopped you out, I'm sure you have recovered your losses. Am I correct? Somebody speak to me. Some of you who are lost and you didn't give up, you've continued to follow God today. Do I have witness in the house that you have recovered your loss, the money?
Yes, sir, we did, sir.
Yes, absolutely. Now, so some of you speak to us. What can you tell us now about the consistency of following an instrument in a trading hour than to try to manage many instruments in a trading hour? So which one is better? Yes, speak to us. Those of you who I love what God did to you today. It taught you a lot of lessons, and then the power you're able to have over it. So, if you want to advise us now to trade many instruments at a trading hour or per time, or follow one instrument, even if you give you stop loss, because you know that the direction is going, is still going to buy or sell, and you wait again strategically and you see it and you see your setup and you find an entry. So which one is better to trade multiple instruments? Because some person will tell me any foul that pass is what I shoot to kill, and then I'll eat it to eat. So which one is better? Yes, I'm listening to us. Which one is better? Who's gonna bail us?
So absolutely
So absolutely the
sticking to one particular pair is better. And I think for obvious reason, what we've been seeing in gold makes it very clear for us that at least, if not just at least,
Yeah,
basically, if you focus on the gold,
yeah,
you have the volume there, and the distraction will be completely eliminated.
yeah, yeah.
But some of us that try to follow go today. Part of the problem why we had the drawdown we had and we couldn't recover quickly, if not for your intervention when you came to the office, was that we were distracted.
Yeah, yeah.
Since we had a drawdown in gold, we were thinking to complement or make up with other pairs, but that
Ah,
didn't really work at all.
that will have finished you people.
Definitely,
Yeah,
definitely.
that will have
So
finished.
I strongly advise that sticking to gold and being very consistent with it will help us go through.
Yeah, absolutely. Absolutely. So, ladies and gentlemen, if you look at it now, I think Euro USD will still continue to sell. Let's look at it so that if you can find, I just want somebody to find a trade, but let me know because I want you to find a trade and it's going to give you a lot of headache. Remember what I said about DXY yesterday. If some of you watch our market update, I told us Euro USD, GBP USD, all of those stuff are going to be selling. In fact, especially AUD USD. And look at the massive sell. I told us about how many pips on AUD USD were there yesterday here on this line. And I say I need to have a sell on AUD USD. Now, so for the whole day, it was a sell, right? That's about, I think I calculated 129 pips or something. Okay, yeah, something like that, 129 or one, I can't remember. So getting down to this point for so now I told us that DXY was recovering, and I've actually got that. But this is the challenge. If anybody want to short Euro USD now, it's risky. Let me tell you why it's risky. Though it may sell down, but remember I told us that this is a resistance for DXY. Now DXY have gotten to this point where it's having resistance. Now the today candle will soon close to open by 11 p.m. West African time. And so if you're not careful, you can enter short on Euro USD and DXY could open and first come up to take out the high of this today. By that, tomorrow candle open and then sell down to an extent before continue. DXY have not totally recovered. And if it happens that way and you short Euro USD, and you short Euro USD, that's going to be very crazy. So you will see that it will draw you back eventually. And if DSY couldn't make it, it's very risky. And that's why, especially you are now getting close of the trading time. If you go to most of the broker now, you're going to see the spread will be very wide. So the spread will be very wide. So even before you cover the pips of the spread, you'll be struggling to make your profit. So here is a resistance where it is right now. Up here is a resistance where it is right now. So that means you have to wait for a candle to open and close. My bias, I'm still bullish for it, but for us to totally recover, we have to go above this. But nevertheless, it has to be a journey from here to that point before the market can. I just want to look at if I can find it any trade that will have been good, but it's very risky now to give you Euro USD to buy or any other instrument, SND USD. You can see USD JPY bought very well. And okay, let me look at GBP JPY. Okay, somebody want to say something. Oh, good. He bought very well. Okay, good. Let me see. My network is very bad. Oh, okay. Kindly drop the video. Of course, definitely, I drop video all the time. It's some of us don't go through those videos. And I'm sure anybody who didn't go through the video of yesterday on the market update, it will be very painful for the person because if some persons who have gone through the video, they will have loved, they will have been so happy to maximize what the market did, especially Euro USD, GBP USD, and all of that. Okay, so let's look back to our gold. So we want to find an entry. Okay, can you, good. Ladies and gentlemen, see something? Can you see that? Imagine for anyone who have bought into gold. This is what it's still doing after all this. This is a doji, this is a doji, and then this is a long week, which also was supposed to buy. This one now is still struggling. You know why? Probably there's no more enough volume. The momentum is weak, right? The momentum is weak. So you can imagine if you are, oh, okay, market, I'm going to buy up and all of that. You always wait patiently, close of the candle, give interpretation, and then you can now find an entry and all of that. So if you look at it now, that means this guy is not done. The pullback is still very, 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 very obvious. Okay. That's why I always tell be patient. Patient is very, very important. If you are not patient, you're going to cause a lot of issues for yourself and all the like. Okay. And so this say Euro USD, I just hope I could just find so in 5 minutes, remember support and resistance. Every time the market moved to a point, now the last point this market moved to was this point, and that is a support there. Here, gold here. This is support tentatively and covering it to be like a demand zone. All right. But I always say lower time frame demand zone is not a valid one. Okay. So you have to be very careful about it. So you want to look at, even if this market want to bounce, it will come back here to mitigate this point. Okay. It should come back here. So the best bet is that somebody will say, so since it's going to come back here, let me sell. It's gambling. You wait for the setup to present itself for you. Oh, okay. Somebody is saying something. Okay, somebody said, well, let's look at gold now. Okay. Okay, so let's look at it now. Gold. There's nothing to look at in gold now. You can't look at anything on gold now. The candle has not closed and it's still forming a doji, so you can't look at it now. So most time, our impatience to wait for appropriate formation actually creates more tension for us. So like this guy is going to come down to this point and eventually either break it if the momentum of selling pressure is high, or actually bounce up. And if it's going to bounce up, you look at it again. So this become a resistance now. This is the point where it was returning from. So two things. If I'm going to continue selling, to either return back here and get stopped out or come down to this point. So somebody will say, okay, I will have just sell this to this point to do how many pips? 20 pips. Well, some do that, but yeah, because it's going to sell, that's definitely that. So, but you're looking at, if you sell to this point, so either it bounce from this point or break it. So for me, I would rather want to wait for it to come down here, break this and retest it, I will continue to sell. Or if you were actually in the market, because before now, yeah, before now, the market actually was retracing, which is still a downtrend, like I said, right? From today, it was total sell-off and all of that. So this like more like a kind of pullback, yeah? So kind of pull back and then the market to sell down. So for me, if where I'm going to sell from and my stop loss, I cannot see 1:2 risk reward, I don't do that. So look at it. For instance, if I was to be selling here, that would make sense for me. Because if I was to be selling here, I'll put my stop loss above this point, and then 1:2 risk reward. Even before this point, I've cut it. But if I'm going to be selling here, what is my justification here? And I'm going to be taking a stop loss here. These are things many of you don't calculate. I'm putting my stop loss here. Now, even if I say I'm taking profit at this point, this is not up to 1:2. Anything that cannot give me 1:2, I don't enter into it because I will not have tolerance for what to recover. Assuming the market just pull back and go to hit my stop loss, it will have given me very big stop loss. I refine my stop loss very well so that I can really see what I control in the market to an extent. Okay. So that's why okay, so let's look at the gold. I'm sure gold you can buy. Okay, now we're looking at gold now. So this candle, you think it's bullish? It's not. So if we engulf this close bullish, then we're going to be buying. This is a very good candle, but this actually destroyed the whole setup. So, but if this engulf it and close above, then we'll be looking for a buy. So now when we look for a buy, then we'll put stop loss below this point. Okay? We'll put stop loss below this point. But take note that even when you buy now, if the trade didn't complete, if the trade did not complete in the next 40 minutes, you are going to be hanging for a break for the next 1 hour. And then when market do that, a new market is opening, it can jump. That jump alone can even liquidate your stop loss and eventually still buy up. So you are close to a market to go for recess. The best way is that you want to wait for the recess to happen, and then you go and find an entry eventually when the market happens. Like I've told us, this will sell down. So why don't I sell? Because I was not there to take a proper entry when I'm supposed to be taking it. So that's why we cannot take that trade. So gold, okay, so let's look at gold again. All right, so gold now, so these are the engulf. So almost closing. Ooh, still have Okay, so maybe if you want to enter gold, you just let out with very small lot size because I don't know its probability of it closing up to this point before the next 40 minutes. So that means if you're entering gold, it's going to be very, very small. It's going to be very, very small. But please, every time in the market you miss the entry at the reversal point, the next entry is at the pullback. Okay, somebody's saying something. Can we buy? Natalie, don't buy. So because our market is going to close in the next less than 40 minutes, and I don't know the energy it's going to do. If you want to buy, because I don't know, maybe you have not bought market today. Natalie, you have not bought any market today, right? You were not in any trade today. Obviously, you are still studying the environment, okay? So if you have not entered any market today, I don't want you to enter market with struggle, okay? So I don't want you to enter market with struggle where you are not going to be managing and all of that. So don't buy, okay? Don't buy. We're going to find a very good setup on gold, and so don't buy. Okay. Yeah, obviously I cannot find a trade for us. Yeah, so if it were here, we'll have entered short. Okay, I can check if I can see. Okay, let me go to my scanner somewhere. I don't understand. Why not? Okay, if you want to buy, okay, you can go ahead. But I don't trade emotionally, right? Look at what I was saying. In the next 37 minutes, market is going to be on recess for 1 hour. A new day open for the market. And when market open for the new day, chances are there that it first pull back if it must continue going up. And by the time it's pulling back, it can hit your stop loss. All right? Or drag you down below even your stop loss. And so if it drag you down, you lose money, right? And then so the best bet is to wait for even that new one to open. Okay, so that's why I'm saying that you should not enter. Okay, because the market has traveled very, very well since today, and trying to struggle with the market can deal with you. So it will have did this that will have entered, and then that will have been justified. And I say the reason why I don't enter this, it has gone far, all right? Except and if this return back here, like a pullback, and then get restricted, I can now say, let me sell. Okay. So, but definitely we're going to find a lot of setups tomorrow, Tuesday. By the grace of God, I know that for sure. All right. So this will have been another one for us to have entered. This is 5 minutes, however, but most time you want to wait for, that you're on 50 minutes. Sorry. So if you look at this market now, very simple. This market on 5 minute time frame, if you are following it, this is the high, all right, that gave birth to this low. And the market move up, actually broke it, but with weak. That was good. And then we have a pullback, 1, 2, 3, a pullback. So this is a pullback. And we have another break of structure above this one. Okay, so a break of structure above this one. So the next thing most time when I want to check what can make the market to still return back, obviously this market had some imbalance. Though this is 5 minutes. Okay, so this mitigated this. Okay, so now that means you're looking at this market probably 1, 2. Okay, here. So if you take all this point here, let's take it together, perhaps here. So the chances of the market to still return back here is very high. So until it comes down here and then mitigate this, that I want to find an entry. Okay. So when market is coming to a close, so how many participants are you going to be interacting with? That's just the whole thing. So, but if you look at the 50-minute 50 moving average, it's very, very fantastic, but you don't depend on it. This is another thing many people do not understand. You don't depend on it. So why is this trade very fantastic like this one that happened? Ordinarily, this was a kind of resistance where the market stopped first, and then market returned back and traveled to it and sweep the liquidity. At the sweep of this liquidity, that was a very fantastic one. I will have entered, right? Because this was already bearish. But conservative trader wait for this. This is a low that brought about the sweep, right? And this low, if this low was now sometime the market, if you had some imbalance here, it will have come there. If there are none, it just stop over there. So conservative trader, we enter this. Now look at two things that the person got. The confluence of the market, similar to Quasimodo strategy. And at the second time, the market now is below 50 moving average. So this fellow is going to enter the market here with stop loss above here. Snapper entry trader is going to refine this thing back to like 1 minute, and his entry will have been here, and he will stack more when the market get down to this point, right? So riding that, it will have been looking at perhaps maybe somewhere down here or somewhere down here, TP1, TP2, in that order, until the massive sell actually came up and all of that. Okay, so what we just need to get ready for, I think this timeline or whatever thing I've just done today, those of us on the forum, it's going to be easier for us to take trade, okay? And to have understanding, okay? Nati, you can see when I say don't take the trade, you can see what gold is still doing, right? Yeah, so it's not good, okay? Yeah, so these are the things that I love us to understand. And another thing you need to understand is that sometimes somebody asked me a question in the afternoon. When a market, a higher time frame, so understand it. Let me show you this thing, everybody. Now, this is the thing you must understand so that you don't get yourself confused. So, external and internal structure. Okay, good. 1 week, 4 hours. Okay, 1 day. Okay, so gold is struggling. I want to buy from there. So 1 day, 1 hour. 4 hour, 15 minutes. M15. 1 hour, M5. M15, M1. So this is what really happens. Sometime when you're on weekly, the market is trending on week. In 4 hours, change of direction in 4 hours is a pullback on weekly, for instance. If this is a weekly time frame and you are looking at the structure is up, if you go to 4 hours, it's already changing and bearish. That's a pullback on weekly. And when the bearish is over on 4 hours, in weekly, that means it's about taking up. So internal structure of 1 day is 1 hour. So sometimes the structure you see, a good opening of daily structure. Now you refining it, you can come to 1 hour and you see the clarity with the candle and all of that to find an entry. 4 hours, internal structure is 15 minutes. Okay? So that's what it is. So look at what I was trying to tell you guys. Oh, I hope somebody will want to copy it, right? You want to snap it, you can snap it, okay? So look at what I'm trying to tell us here. Okay, so look at what I'm trying to tell us here. Okay, so see what I'm trying to tell us here. Where are we? Okay, good. Okay. So this is 4 hours. And this is 15 minutes. Okay, so if the 15-minute change direction, if the 15-minute change direction, for instance, if the 15-minute change direction, for instance, like I'm bearish now, that is a kind of pullback on 4 hours. And when it's taking off and change character, right? And change direction entirely, maybe market structure shift. The market structure shift of 15 minutes is already the market resuming for a move on 4 hours. So that's why when you see a market set up on 4 hours, you return back to 15 minutes to take it so that you can come in early. So if you're a scalper, your external liquidity or external structure is 15 minutes. All right? Your external liquidity or your external structure is 15 minutes. So why your internal structure is 1 minute. All right. Okay, so guys, I need to pause here. Like I told us that you can take gold now, so you have to be very careful. And so that you will not just, okay, so we can see this guy who said it's going to be selling, all right? But why will I not enter? Because I'm going to be entering late and my stop loss will not be justified. That was a poor risk management. All right, thank you very much, everyone. You have a question? I'm sure it's a very detailed class. If I'm very sincere, so a very detailed class. If I'm very sincere, simple though, but I know those of you who are new look very difficult. Okay, but definitely over time you're going to blend. All right. So any question? So this I explained to us is applicable to any market, not Forex alone. So it's applicable to any market, Bitcoin, anything, right? So it's applicable to every market. Okay, if there are no questions, so let's go rest. And so tomorrow, by the grace of God, I'm sure we're going to be finding a lot of signals to take trade as much as possible. And but please be one, if you're on a particular trade and it's running well, another signal is sent. Don't say you want to take all the signal. After all, you need to know how much is your capital so that you don't just jump at every signals while one is still running and then you jump into another one. You say,
Hello,
oh,
sir.
yes, go ahead, sir.
Could you please send us the video?
Definitely.
So the detail class, please.
Yeah, definitely. It's going to be done.
Okay, sir. Okay, sir.
Yeah.
Thank you, sir.
You're welcome, sir.
Yeah.
So, all right, guys. So thank you very much for coming. And so let's all build up and then help ourselves as much as possible. Do have a nice rest, everybody. Bye-bye.